Low-risk blue-chip stocks that invest 100% into Canadian companies are not only going to bring you profits, oh boy, they're going to bring you a certain level of flexibility thanks to those Canadian eligible dividends. Hold on to your seatbelts, folks. This is going to be a good one. When it comes to investing, safety and growth don't always go hand in hand. However, blue chip ETFs are an exception, and when they are investing in 100% Canadian, oh boy, there are even some tax benefits that we need to talk about. However, let's begin with why Canada is a great place to invest. The Canadian market may not be the biggest, but it is absolutely rich in some key sectors like banking, natural resources, and, well, telecommunications, although the telecommunications sector has had its fair share of trouble lately. Nonetheless, these sectors are dominated by companies with long track records of stability and growth, otherwise known as blue chip stocks. When you invest in a Canadian ETF that focuses on these blue chippers, you gain exposure to these stable giants without all of that volatility that often comes with investing in other riskier markets. Plus, for Canadian investors, these ETFs offer a distinct advantage. They are composed mostly of Canadian eligible dividends, which can qualify for, of course, that dividend tax credit. This will save you money when it comes to tax time for sure. In fact, these ETFs provide some tax versatility to your portfolio. Let me explain. Typically, a lot of Canadian investors like to keep dividend stocks inside of their TFSA or RRSP to avoid paying taxes on dividends. That tends to be an absolutely smart idea for sure. However, as contribution space runs out, you can find yourself in a little bit of a pickle, and these ETFs may just be the key to solving that. Because they are investing entirely in Canadian companies, you have the dividend tax credit. Also, these stocks gain most of their value from growth. Thus, the dividends are, well, they're smaller. This means that these are great ETFs to hold outside of a registered account when contribution room is at a premium. Of course, if you do have a lot of room in your TFSA, you really should be holding everything in it. There's no point in paying taxes at all if you don't have to. Did you know a sub to the channel is the best way to get more blue chip future content? In putting together this list, the number one qualifier is that these ETFs must be, well, blue chip. This means they are not coming with covered calls or leverage. They are very low risk ETFs. In fact, most of these ETFs today are passively managed, so they will also come with lower management fees. Today's list is sorted by their 1 year total return. Nonetheless, I do think all 5 of these ETFs are pretty awesome and accomplish exactly what we are looking for in a 100% Canadian blue chip ETF. So without any further ado, let's do this. Kicking off this list, we have the iShares Core S&P TSX Capped Composite Index ETF with a ticker of XIC. This ETF is looking to add long-term capital gain by mirroring, well, the S&P TSX Capped Composite Index as in the title of the ETF. At the time of recording, their price was coming in at $39.51. They have an NAV of $39.30. Their assets under management, $13.36 billion, and they have a beta of, and this one's not going to surprise you, 1.00 to be more precise. So they are pretty much exactly as volatile as the market average. Their return on equity, that's coming in at 13.33%. Looking at the fees, they have a very low management fee of 0.05%. The management expense ratio, 0.06%. Switching to dividends, they have a yield of 2.502%. That's a quarterly dividend of 27.9 cents per share. Let's take a look at their returns. On their 3-year return on investment, that comes in at 17.55%. Factor in the dividends, we get a total return of 26.39%. On their 1-year return on investment, 26.39%. Add in those dividends, we get a total return of 27.87%. XIC has 222 holdings, and their top 3 are Royal Bank, Shopify, and TD Bank. In 2023, their dividends were 85.9% Canadian eligible dividends. That's not too shabby. Coming in at number 4, we have the BMO S&P TSX Capped Composite Index ETF. with a ticker of ZCN. This ETF, once again, it invests in that S&P TSX Capped Composite Index. Their price at the time of recording, $33.16. Their NAV comes in at $33.27. Those assets under management, $8.48 billion, and they have a beta of 1.00. I think that's the most common beta we see today, but don't worry, they're not all ones. There is some variation. Their return on equity, that comes in at 14.71%. Looking at their fees, their management fee comes in at 0.05%. That expense ratio, 0.06%. So once again, these are some nice, really low fees. You gotta love that. Looking at their dividends, they do have a yield of 2.774%. It's a quarterly dividend of 23 cents per share. Switching over to returns, on the 3-year return on investment, that comes in at 14.46%. Factor in the dividends, total return 23.54%. On their 1-year return on investment, that comes in at 24.43%. Add in those dividends, total return 27.88%. ZCN is very similar to XIC. However, they actually do have one more holding coming in at 223. But their top 3 are the same: Royal Bank, Shopify, and TD Bank. In 2023, their dividends were 76.9% Canadian eligible dividends. This is a much lower number than XIC, but keep in mind, this one did have 20% of capital gains in that fund. Taking our third spot, we have the Vanguard FTSE Canada All-Cap Index ETF with a ticker of VCN. This ETF invests in large, mid, and small caps, mirroring the FTSE Canada All-Cap Index. Their price at time of recording comes in at $50.64. They get an NAV of $50.79. Their assets under management come in at $7.74 billion, and they have a beta of 1.00. That return on equity, 13.35%. When we look at the fees, their management fee comes in at 0.05%, and their expense ratio, exact same, 0.05%. Looking at their dividends, they have a yield of 2.052%. It's a quarterly dividend of 29.8 cents per share. Looking at their 3-year return on investment, that comes in at 16.44%. Factor in the dividends, we get a total return of 25.04%. On their 1-year return on investment, that comes in at 25.01%. Sprinkle in those dividends, we get a total return of 28.22%. VCN has 163 holdings, and their top 3 are Royal Bank, TD, and Shopify. Where have we seen those 3 before? In 2023, their dividends were 87.5% Canadian eligible dividends. In our almost top spot at number 2, we have, well, we're back to Vanguard again. The Vanguard FTSE Canadian High Dividend Yield Index ETF with a ticker of VDY. This ETF seeks to provide investors with exposure to Canadian companies known for high dividend yields. At the time of recording, their current price was coming in at $49.69. Their NAV, $49.76. Those assets under management, $3.01 billion. And their beta, nope, it's not 1.00. It's actually 0.96. So they're just a tiny tad less volatile than the market average. That return on equity, 14.94%. Switching over to fees, that management fee comes in at 0.20%. Management expense ratio, 0.22%. So this is the highest we've seen thus far on the list, but we still have one more to go. Looking at their dividends, they have a yield of 3.975%, and this one is a monthly dividend of 15.8 cents per share. Switching over to returns, their 3-year return on investment comes in at 16.07%. Factor in those dividends, we get a total return of 29.88%. On the 1-year, return on investment, 23.51%. Add in the dividends, we get a total return of 28.86%. This ETF has 54 holdings, and their top 3 are Royal Bank, TD, and You guys thought I was going to say Shopify, but nope, it's Enbridge. In 2023, their dividends were 93.4% Canadian eligible dividends. I will tell you right now, this one is the best on the list when it comes to Canadian eligible dividends, based of course on the 2023 data. In our top spot at number 1, we have the iShares S&P TSX Canadian Dividend Aristocrats Index ETF with a ticker of CDZ. This ETF invests in our Canadian aristocrats, which are companies that have been consecutively increasing their dividends for 5 or more years. And you guys probably know I have a soft spot for Dividend Aristocrats for sure. Their current price at time of recording comes in at $36.58. They have an NAV of $36.83. Those assets under management, this is the only one that has not yet hit the 1 billion club, 953.26 million. Looking at their beta, no, it's not going back to 1, it's 0.89. So they actually are a little bit less volatile than the market average for sure. Their return on equity, that's coming in at 12.75%. On to their management fees. These are the highest fees of the day. The management fee is 0.60%. The expense ratio, 0.66%. Switching over to dividends, they have a yield of 3.609%. Once again, we do have another monthly dividend of 10.9 cents per share. Looking at their returns, on the 3-year, their return on investment comes in at 16.20%. Total return 27.89%. Looking at that 1 year, that return on investment comes in at 26.62%. After we factor in the dividends, we get a nice looking total return of 31.19%. That's not too shabby, and it's also good enough to lead this list today for sure. CDZ holds 92 different companies, and their top 3 are, this is great, it's not what you're expecting, Fiera Capital, Aecon Group, and Capital Power. In 2023, their dividends were 49.4% Canadian eligible dividends. And you might be thinking, what? That's really low. But they do hold 100% Canadians, but they had a year where they had a lot of capital gains. In fact, their capital gains added up to 50.2% in 2023. So that's why that number is a little bit lower. I expect that number to be much higher in 2024, but you never know. You never know. These are 5 awesome ETFs that are keeping it Canadian for sure. A couple of them had significant capital gains, but that is something you will run into from time to time, regardless of the ETF. That's kind of a normal part of investing. If you are interested in any of the ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on ZID. Thank you for watching, and I will see you in the next video.